Hello everyone, this is Okane and I have had some requests about more videos. The previous ones about price action and trend support resistance, they've been for more advanced people, so I'm gonna try to take it easy and explain in a bit slower pace, and we will talk about the indicators involved. And this is going to be a good way if you're a beginner, a good start for beginners to analyze the charts. And I'm going to approach this as if you were a complete beginner starting with your MetaTrader demo account. So the first thing you want to do is to add a chart. So we'll select here EUR/USD, and the standard chart looks like this. So again, the plus sign here, and then pick an asset you like. I like to trade EUR/USD. Why? Because a lot of things happen on EUR/USD. We call it volatility. Price moves up and down often, and that gives you good trading opportunities. That's reason one. Reason two is that in binary options, you need to hit at least 58% or 56%, depending on the payouts, in order to maintain a break even. So that's why I think EUR/USD is better, because the payouts are higher. So if you even win 6 out of 10 times, you're gonna make money. So that's two reasons. And the third reason is that I have been trading EUR/USD, focusing on this asset only for a long time, and I've been profitable over the past year and a half. I've been making money on EUR/USD. I think my long term is about 70%. Some months it's 80, but long term it's about 68. Or 70%. Lately it's been 70%, because I've been making a good return on investment per month, about 40-50%. So my latest win rate has been much higher, and so that's why I think it's good to focus on one asset. I mean, if it pays you that much, then it's wise to stick with only one asset. It's stupid to open 16 charts or even 2 charts. As a beginner, you want to focus on one asset. So don't be greedy and stick to one chart, because you need to understand this first. Okay, so you've opened your chart. The first thing you want to do is to remove this grid. And don't be scared of clicking around, because this is how you learn. I mean, you can read the handbook, you can go to the MetaTrader website and learn and read, or you can just click around a little bit. So the grid, remove it, and you see the net is gone. Let's view it again. There you go. I think it's better this way. It's a cleaner chart. So the next thing you want to do, to zoom in a little bit, just click twice. And also select the candlesticks. The candlesticks, we'll get to those later, but for now just select candlesticks. Also, one more thing you want to do is the shift end of the chart from right border. What happens is that, look to the right now, the chart automatically jumps. So if you deselect both of these, then the charts, when they update, you're not going to see what's happening. So it's good to have them clicked, both of them, so you know you're updated and you're seeing the current price and not the history. So the next thing we want to do is to add at least one indicator, because for a beginner, seeing this doesn't tell you much. It just looks random, and it looks totally like tossing a coin. It's either going up or down, or up or down. So doesn't make much sense. So you want to try to make sense of it. and that's why we use indicators. That's something you can find here. Insert indicators, and my favorite is oscillators. So pick stochastic oscillator, and I like the 533, so I don't change anything here. However, levels, if you don't already have them preset, choose 20 and 80. We'll get to those in a moment. Okay, so this is how it looks. Let's make it a little bit bigger just so you can see. As you can see, 80 and 20. Those are the levels we chose, and the 5, 3, 3 as we set the levels. So now you see again something that might not make much sense. Remember, the name of this indicator is stochastic oscillator. So if you know something that oscillates, goes up and down like this. So what does this indicator say? Again, this can be really confusing, but what it says is several things. First thing is that when it gets to the level 80, the above line here, this horizontal line, when price touches it or crosses above, we call this level an overbought area. This means that the price has been bought so much. This price here, the price you see on the right bar here, these are the prices. This is the ratio between euro and USD. Okay, the exchange rate, more correctly, the exchange rate between euro and USD, or whichever asset you're looking at. So when the euro dollar gets overbought, you see that stochastic has touched or crossed the 80, and that means that it's time for sellers to enter the market. This doesn't always happen. As you can see, sometimes price gets overbought, for example at this level, but then it continues up. As you can see here, the candles. At this candle, price was already overbought. It touched the level 80, but then price continued up all the way before it went down. So this is just an indicator. It just indicates that prices are getting overbought. Doesn't mean that you should jump into a trade and take a put option down just because it says it's overbought. Now the same goes for, the opposite is true for the oversold areas. The 20 line here, level 20. Some people use the level 90 and 10 or 15, 75, 25, 75. I like the 2080. Now, again, the oversold in this case means that the price has been sold, and the buyers will enter the market or should enter the market. And the same is true that just because it's oversold, like for example in this area, as you can see. So look down at this stochastic, see it's oversold, it crossed the 20, but prices didn't go up. It didn't make a higher low. It didn't step up. Instead, it kept going down. So it's not always true. You have to remember that. This is just an indicator. So the next thing it tells you is about the trend. If prices are trending down, then these overbought positions will occur at lower levels, at lower steps. So for example, this one, you have an overbought position here, but the other one is down here. So this is also an indicator that we're now in a downtrend. You get a lower high here because this high is lower than this one, and the stochastic is getting overbought at this level instead of high up at this price level. By the way, this is the 1 hour time frame, and you should basically analyze all time frames, at least from the 4 hour time frame and below, before you take a trade. We will get to that in future videos. For now, let's just focus on how the stochastic oscillator will help us finding the trend. So this is the hourly trend, and the long-term trends on the higher time frames are more important, they're more significant and stronger than the trends on the 5 minute and 1 minute, because as you can see, each candle here represents 1 hour, but if you look at the 5 minute chart, this is not really this does not represent a clear strong uptrend, because it's just you're just looking at 15 minutes here, you're just looking at 3 5-minute candles, that's just 15 minutes. But if you look at the hourly, you will see that when you see a top like this and you analyze the lower tops, lower highs and overbought areas on an hourly time frame, what it tells you, this is a lot of hours, a lot of volume, so this is more important, and you will have a better success analyzing the higher time frames for trends and support resistance lines. We get to those in future. So the same goes with the uptrend. If you would scroll back, and here you see that we had an oversold area. Look at the stochastic here. So we just scrolled back the chart, look at the stochastic here, touching the 20 level, was oversold, the candles came down, made a low, and the trend then reversed, and the prices, the candles started going up instead. And as you can see, the next oversold area that touched the 20 line and even crossed it was up here, right before it continued up again. So that's what the stochastic tells you, and those are some of the things that stochastic oscillator tells you. For now, just focus on that, focus on learning how to spot these areas. So what do you do after? What do you do after you've seen that, okay, prices are trending down, I see that now, making lower highs, and as you can see here, we have what seems to be a breakout. If you put a line here, just so you can see. So look at this candle here, see how it was overbought. So if the trend would have continued down, let's put another trend line here so you can spot this area. So in this area, just so you understand, this is just an area, it's not really an exact line, so it's an area of a downtrend. So you can see on this candle, prices got overbought, but then broke above, it came down, touched this line, didn't completely get oversold, and then continued up. So when this happens, this is where you should go to a higher time frame and see what's happening, adjust your lines there. As you can see now, we're on the 4-hour time frame, and you see that the trend is still going down because the prices were above this line here. See here the candles, zoom in a little bit, see the prices were above this line, and now they are approximately below this area here. So still a downtrend, and then you can continue up, you can go to the daily time frames. You see the major trend is still going down. So go back to the hourly. Now if you're doing short term, sure, you could have taken call options here. If you are doing longer expiries, we should look at the higher time frames as well for to find lower highs in this case, because EURUSD has been in a downtrend now for a long time, so obviously you want to do put options if you're a long-term trader. And even as a short-term trader, you can find these lower highs. And for example, I do 15-minute or 5-minute expiries, but I still analyze these higher time frames because it gives me the exact positions to enter. So once you have looked at these areas with the lower highs, in this case, you would scroll down and confirm with the stochastic that, okay, for example, you want to enter here at this low. Let's say you would have you were waiting for the prices to come up, touch this line here, this trend line, and waiting for the stochastic to become overbought. So you would go to the hourly, would see, okay, it's getting overbought, and 30-minute time frame, again, it's getting overbought, that's good. 15-minute time frame, same thing here, it's getting overbought. And once you have at least 2 or 3 of these higher time frames that are in agreement with the stochastic that they're overbought for a put option, then you're pretty much ready to take the trade. So where exactly would you take the trade? Would you take it here? Would you take it here? That's when you need to adjust your line. So this line that we put, now we are going from the higher time frames, we go further down, and in this case you see that this was a support area. So let's take a look at more history here. Okay, so here was some support and here was resistance. So you would adjust your line there. As you can see, this support was broken here, right? So the candles were above. When the candles are above the line that you draw, it's a support. So these candles closed above this line. If you're a beginner, if you're a complete beginner, a candle, these wicks, these smaller parts, the tails, those are called the candle wicks. It means that price was here, but then was pushed back up. And from above, price was up there, but was pushed down. So the green ones are upgoing candles, the white ones are the ones that go down. We call them bulls and bears. The bears go down, the bulls go up. So so let's take a look at this candle, for example. It opened here, went up there, then it was pushed down, all the way down. It was pushed up a little bit before it closed. So it closed lower than it started. So that's why it's a white candle. It's a down-going candle. But this candle here went down, was pushed up, and it closed above this line. So it closed closed up here, closed above the price it opened. So that's why this is a green candle. So later on here, this support broke, price fell. It tried to break it up again, didn't completely manage, did here, but then it dropped again. But this time it really, in this area, really became a strong resistance because price couldn't even reach. No candles could close above it. So in this case, when you were waiting, you would know that when price comes up as close as possible to this line, you would enter your trade in agreement with the stochastic. So you would look for stochastic to be overbought before you would enter, and you would see that yes, the stochastic is getting overbought already before reaching the line. Let's take a look really closer here. Now look at this candle here. Already here, up here, you would see that it's really close. And on the next candle, it was really close. But so if you would have waited, if you had this line, you would have entered. I would have entered at the top. As soon as the price touched or came really close the line, I would have entered a trade. And as you can see, when the candle closed, the stochastic became completely overbought. So you would kind of know that it's gonna get overbought. You would anticipate it. You would go to the lower time frames. Again, you can see this candle. Stochastic became precisely overbought when this candle came up here. Even though it closed down here, it was it got the stochastic to become overbought. So already here you would know that the next candle, if it closes above the other one, you're gonna get an overbought position. That's why I like to enter at the top. Because look at the next candle. So if you would have entered after this candle, as you can see, the price went up here. So if you had a 15-minute time frame or a 10-minute time frame after this candle, you would have lost because price would go against you. That's why I want to enter at the top. That's why it's important you have set up your lines as accurately as possible. And here you can see how accurate the lines are in relation to the candlesticks. And you can go further back. I think you should go further back. Let's see, on the higher time frames, to see how your lines are adjusted. Usually it's an area, but since you're taking short time expiries, you can adjust them on the lower time frames, but draw them on the higher ones, then you can adjust them on the lower time frames. Here on the 4-hour, you will see something that tells you that this line placement is pretty good. It's this candle here. So remember, we were waiting for this candle to come up, touch the line, right? This is what we said, to get an overbought position. Not on the 4-hour, but it's enough that it was overbought on the 1 hour, on the hourly time frame. Regardless, what you would see is that this huge candle, this bearish candle, means lots of sellers. So price was pushed down here before. So we are anticipating people selling at this level again. Selling means put options. So you see how well this line that we put up matches with the 4-hour time frame. This is lots of volume, lots of history in just this one candle. And also here, look at the support here. Candle closed above, this candle was pushed up, and you can go back. You see this area between, it's just a few pips really of difference here, just 3 or 4 pips. So this area was support here, this area was support, was resistance here. So our line is good. We have lots of confirmation, lots of candles confirming it. And on the hourly, we already covered that. So let's go further down. Now let's go to the 15-minute time frame. Zoom out a little bit so you can see. So now when you come back to the 5 and 15-minute time frames, it will be much easier for you to know where you should enter the trade. As you can see, this candle didn't reach up all the way to this level. So if I was to enter this trade, I would have entered at the top of this candle here, because this was the closest we could get. And as you can see, it's okay. It wasn't really overbought on the 5-minute time frame, but let's take a look at the higher time frames. The hourly was overbought, the 30-minute was overbought, and these are higher time frames, so more significant. The 15-minute was overbought as well. So it would be totally okay to enter at the top of this candle, even though the 5-minute wasn't completely overbought. So a 10-15-minute trade would have worked perfectly. You could have waited and entered when the 5-minute got overbought at this level, And again, a 15-minute trade would have given you a win if you, as I said, would enter at the top of the candle at the touch and not at the end or close of the candle. You could have also taken a longer expiry, would have been safer. You can check it out on the 1 minute time frame. You can scroll back and look. So this is how you analyze and set up your lines. You can adjust them and according to the higher time frames, and then go lower. So once you know the trend, you know what to look for, and then you set up your line, you know what to wait for and where price is going, and you would look at your stochastic, you would confirm, you would enter the trade and be a more confident trader. Now we wouldn't care, this is why I don't take longer expiries, because I don't know what's going to happen afterwards. So if you, as you can see, this trade would have worked, this one would have worked as well, but then the trend kept getting, the prices kept getting oversold at higher levels instead of lower levels, and kept going up above our trend lines here. So I would avoid taking too long expires because I can't predict that far in the future. And okay, I don't want to overwhelm you this time. We will go through support, resistance, and candlesticks, and I will introduce one more indicator in the next session. And if you have any questions, ask us in the forums, binaryoptions.net. I do share these videos for everyone to come and discuss. So you can ask in the forum, that's where I will check. So please let me know what you think, and see you later.